Imagine waking up tomorrow and never having to pay taxes again. No income tax, no property tax, no sales tax, nothing. Just pure financial freedom where every dollar you earn stays in your pocket. Sounds like a fantasy, right? Well, what if I told you there are places on this planet where this dream is actually a reality? Welcome back to the channel, and today we're diving deep into the mysterious world of tax-free territories. These aren't just random islands in the middle of nowhere. We're talking about legitimate jurisdictions where millions of people live, work, and build their fortunes without ever sending a check to the taxman. But here's the million-dollar question. Are these places the financial utopia they appear to be, or is there a darker side hiding beneath the surface? By the end of this video, you'll understand exactly how these tax havens operate, who can actually benefit from them, and most importantly, whether moving to a tax-free paradise could be the financial game changer you've been searching for. Trust me, some of these revelations will completely change how you think about taxes and wealth building. Let's start with the most famous example that everyone's heard about, but few truly understand: Monaco. This tiny city-state on the French Riviera has become synonymous with luxury cars, mega yachts, and billionaire residents. But Monaco's appeal isn't just the glamorous lifestyle, it's the complete absence of personal income tax for residents. Think about this for a moment. If you're a high earner living in places like California or New York, you might be paying combined federal and state taxes exceeding 40% of your income. That means nearly half of everything you work for disappears before you even see it. In Monaco, that same person keeps 100% of their earnings from employment, investments, and business ventures. But Monaco isn't alone in this tax-free club. The United Arab Emirates has built an entire economic empire on the foundation of zero personal income tax. Dubai and Abu Dhabi have transformed from desert trading posts into gleaming metropolises that attract entrepreneurs, investors, and digital nomads from around the globe. The UAE government generates revenue through corporate taxes on certain industries, import duties, and fees, but individual residents enjoy complete freedom from income taxation. Then there's the Bahamas, where the government operates entirely on import duties, stamp taxes, and business licenses. Residents pay absolutely nothing on their personal income, making it a magnet for hedge fund managers, cryptocurrency investors, and anyone looking to maximize their after-tax wealth accumulation. Now, before you start planning your immediate relocation, let's talk about the reality behind these tax-free promises. The first thing you need to understand is that becoming a tax resident in these jurisdictions isn't as simple as booking a flight and renting an apartment. Take Monaco, for example. To qualify for tax residency, you need to physically spend more than 6 months per year within the country's borders. But here's the catch. Monaco is only about 2 square kilometers in size, making it smaller than most city neighborhoods. Finding accommodation isn't just expensive, it's nearly impossible. The average price per square meter for property in Monaco exceeds $40,000, meaning a modest one-bedroom apartment easily costs over $2 million. The UAE presents different challenges. While Dubai and Abu Dhabi offer more space and relatively affordable housing compared to Monaco, obtaining residency requires either substantial investment in local businesses, purchasing expensive real estate, or securing employment with a UAE-based company. The government has recently introduced new visa categories for remote workers and investors, but these still require significant financial commitments and ongoing compliance requirements. Here's where things get really interesting, and this is something most people completely miss when they fantasize about tax-free living. Even if you successfully become a resident of a tax haven, your original country might not simply let you walk away from their tax system. The United States, for instance, taxes its citizens on worldwide income regardless of where they live. An American moving to Monaco would still owe full U.S. taxes on their global earnings, making the move financially pointless unless they're willing to renounce their citizenship entirely. This process, called expatriation, involves complex procedures, substantial fees, and potential exit taxes on unrealized capital gains. Other countries operate on residency-based systems, meaning you can potentially escape their tax net by establishing genuine residence elsewhere. However, tax authorities have become increasingly sophisticated at detecting fake relocations. They examine everything from where you spend holidays to which country issues your mobile phone bills, looking for evidence that your tax haven residence is merely a paper arrangement. But let's assume you can legitimately establish residence in a tax-free jurisdiction. What does life actually look like in these places? And are there hidden costs that offset the tax savings? Living in tax havens often means accepting significant lifestyle trade-offs. Monaco, despite its glamorous reputation, has virtually no beaches, limited cultural activities, and a cost of living that makes Manhattan look affordable. A simple dinner at a mid-range restaurant easily costs over $100 per person, while grocery prices can be double or triple what you'd pay in major American cities. The UAE offers more space and amenities, but comes with its own challenges. The extreme climate means spending most of the year in air-conditioned environments, while cultural restrictions can limit social activities and personal freedoms. Many expatriates find themselves feeling isolated, particularly those who don't speak Arabic or aren't familiar with Middle Eastern customs. The Bahamas presents yet another set of considerations. While the tropical paradise lifestyle appeals to many, the limited economic opportunities mean most residents are either retirees living off accumulated wealth or individuals whose income comes from businesses or investments located elsewhere. Professional opportunities are scarce, and the cost of imported goods makes daily living expensive despite the absence of income taxes. Here's a crucial point that financial advisors rarely discuss openly. Tax haven residency works best for individuals who already possess substantial wealth, not those trying to build it from scratch. The high costs of establishing and maintaining residence, combined with limited local income opportunities, mean you need significant existing assets to make the mathematics work in your favor. Let's run some numbers to illustrate this reality. Consider a successful entrepreneur earning $500,000 annually who's considering relocating to Dubai. At first glance, moving from a high-tax jurisdiction could save over $150,000 per year in taxes. However, the costs of UAE residence visa, housing, international school fees for children, frequent travel to maintain business relationships, and the premium pricing for goods and services might easily consume $50,000 to $70,000 annually. The net savings are still substantial, but the lifestyle changes and logistical complexities make this strategy suitable only for specific circumstances and personality types. Many people who attempt tax haven residency find themselves returning to their home countries within a few years, having discovered that the theoretical tax savings don't compensate for the practical challenges of international living. There's also the question of long-term sustainability. Tax haven jurisdictions face increasing pressure from international organizations and major economies to reform their tax policies. The Organization for Economic Cooperation and Development has implemented various initiatives designed to increase tax transparency and reduce aggressive tax avoidance strategies. Some traditional tax havens have already introduced new taxes or compliance requirements in response to this international pressure. This brings us to a critical consideration that most people overlook: the psychological and social costs of tax haven living. Humans are fundamentally social creatures, and relocating to a foreign jurisdiction often means leaving behind family, friends, professional networks, and cultural familiarity. The stress of adapting to new legal systems, business practices, and social norms can be substantial, particularly for individuals who haven't previously lived internationally. Moreover, tax haven residency often requires maintaining detailed records and documentation to prove legitimate residence to both your new country and your former tax jurisdiction. This ongoing compliance burden can be time-consuming and expensive, requiring professional assistance from international tax specialists and legal experts. So what's the bottom line on tax-free paradise living? The reality is far more nuanced than the promotional materials suggest. Tax havens do offer legitimate opportunities for significant tax savings, but they're not magical solutions that work for everyone. Success requires substantial existing wealth, careful planning, professional guidance, and genuine commitment to international living. For most people, the fantasy of tax-free living remains exactly that, a fantasy. The combination of high entry costs, lifestyle limitations, compliance complexities, and social trade-offs makes tax haven residency suitable only for a small subset of high net worth individuals who can genuinely benefit from the arrangement. However, understanding how these jurisdictions operate provides valuable insights into global wealth strategies and tax policy. Even if you never relocate to a tax haven, knowledge of international tax structures can inform better financial planning and investment decisions. The curious case of tax-free islands reveals a fundamental truth about wealth building. There are no simple shortcuts or magical solutions. True financial success requires disciplined planning, strategic thinking, and often accepting trade-offs between different priorities and lifestyle preferences. What do you think? Would you consider relocating to a tax haven if you had the financial means, or do the lifestyle trade-offs outweigh the potential tax savings? Share your thoughts in the comments below, and don't forget to subscribe for more deep dives into unconventional financial strategies.